Hello and welcome and hello. Thank you for joining me on a very special edition of Un Poco Mas. It is a very critical time for the SoFi stock. Of course, big game today. It's our pregame spectacular. Of course, if you own SoFi shares, you are already a champion, already a huge winner in my book. There's just been a lot in the news lately with the SoFi stock. Let me head on over and share my screen. Welcome and hello and welcome, guys. Thank you for joining me. It is un poco mas. I am at my home bunker in just outside of Decatur, Alabama. So sorry, there's a little background noise. We got gardeners, we got landscapers working. But hopefully you guys can hear me okay. I wanted to talk about what's going on with the SoFi stock because I was just watching Uncle Bruce. I was watching the SoFi guys, Tanner and the boys. I was watching his interview with Gary Gordon. Um, and there's so much really misinformation out there about what's going on with the stock. I mean, you talk about a track record, you talk about an executive team, you talk about the company's been public for 10 quarters, so of course that's their track record. And, the analyst that, retired analyst Gary Gordon, he's stuck in a way of thinking, I think, that anything that is claiming to be a disruptor, anything claiming to take market share too quickly is not to be trusted. But if you really take a careful look at SoFi's books and their trajectory, their earnings, it's very, very solid. What I mean when I say worlds are colliding Costanza style, it's where Susan met, George's friends and his world started to collide and all his lies started to crumble. What's happening is shorts every single ER of late have been putting their bet on a credit card. And you see everybody's shocked. I've been looking at the short ratios every single day and telling you guys going into the ER that they were totally, totally out of whack. Every single one up at 50% and then 60%. And so this is a debt that has to be paid. All this shorting, all this borrowing, it doesn't just evaporate when the good ER hits. And the evidence showed they were shorting deeply right into the ER. Everybody's so surprised. The data's right there in front of you. It's very, very easy to see. Now, who's going to win? Who's going to win when these tectonic plates collide? You have earthquakes, you have carnage. I'll tell you who's going to win. The bigger fish, the bigger money. Big bank eat little bank. The baggy shorts that were shorting, on this ER that were shorting between 740 and 680, they're done because the smart money is coming in. Do you think everybody talking about the stock's going to go to 5 and to go to 4? Um, do they understand who the smart money is, who's at the top of the list here? Vanguard, Blackrock, you have Citibank coming in. Um, these are not companies that are just going to I mean, do you think Vanguard's going to let their 70 million shares or 70, just become worthless? It's not going to happen. This whole fantasy about 4 and reverse split, that was all pre-earnings. So who's going to win? The longs are going to win. Why? Because the longs were right. That's how this game works. That's how this works. You freaking turds. At some point, the truth matters. At some point, the fundamentals matter. Options are telling me. Options are telling me. The short's already lost. Okay? People are very confused about what's going on with options. Okay? People are like, oh my God, there's 30,000, 50,000 open interest on, $7 puts. That means they're going to push it down to 675 by the end of the week. Guys. You don't know the first thing about options. If you had your dick in your hand, you wouldn't know what to do with it. I mean, These are options that were these are bets that were placed before the ER. They haven't closed out the positions. The position they're hoping for a miracle. It's a Hail Mary. Oftentimes when you buy options and you're wrong and they become almost worthless, you don't close out the position. Just psychologically, you're hoping for like a lottery ticket. You're hoping the next five numbers that hit in the Keno game are yours, and you're not going to get thrown out of your suite at the circus. Um, but anyway, guys, welcome and hello and welcome. Thank you for joining me on Un Poco. Oh, it's the show where we give you just a little bit more. Of course, I know the big game is today, but this is just there's just so much misinformation. It's like, you look at the bowling ball and the Midwest Values 650 bookended short, and it didn't work. Guys, they started at 750. The most they could push it down, period, was 750. Don't pay so much attention to the open interest, all these puts down here at 7. Pay attention to the volume. Pay attention to the volume. On the volume, the puts are coming in at 8 and the calls are coming in at 850. Okay, yes, there are puts coming in at 757. There's absolutely no indication that the smart money plans to push this thing way down, at least not this week. It's just not happening. Um, Options aren't telling you that. I mean, max pain again is 8. So, people thinking those puts are going to print at 7, that is dead money. Dead money walking. Dead money walking. Um, so like, and I just wanted to comment on that. And basically, the short interest has gone absolutely through the roof. Like short interest, 150 million shares. Short interest of free float, 16.53. So off exchange has been huge. They were betting against the ER, and they were wrong. And now the baggy shorts are trapped. And Uncle Bruce I was just watching his video. He's exactly right. I don't know Uncle Bruce that well, but he seems to really understand what he's talking about. He's talking about the old Texas two-step, where they step up the price 2 steps, then step it down 1. And this is how smart money controls stocks. And he's talking about how basically the shorts need to push it down to a certain level to cover at a profit, and they're just not going to be able to do that. Now, I wasn't able to watch his whole video. I will definitely go back and watch it. Sorry guys, how's everybody doing? Premium of the option here for the short squeeze. Yeah, I mean 17% is getting pretty dangerous. Particularly if you get some good news, particularly if you get some huge institutional buys. Institutions are buying every single day, guys, but they're nibbling. They're nibbling right now. The huge whales in the stock, the Blackrocks, the who else is it? Silverlake, Vanguard, some of the others. They're growing positions. 20, and a lot of this is confusion, guys, because people are looking at this. I was told finally I definitely subscribe to Fintel. I love Fintel, but I was told not to log in. I don't know. I think it's cool because again, I'm giving free advertisement. I pay full boat. I have no links or discounts, but I definitely love Fintel, and they give you real accurate, up to date filings. Now, people are talking about some of these companies are reducing their share count. Now, I went ahead and did the homework on this, and a lot of these companies are short long. A lot of these companies, if you look at the list of short hedge funds, they're basically short long, and they're liquidating their short position with their long share. And then they were re-shorting from the top after the ER. So doesn't mean they stop. It just means they're trying to adjust the basis of their short upward so they can make a bigger profit if it's pushed down, to a lesser extent. So instead of needing to get down to 650 to profit, now they can get down to 740 or something like that. But I think it's going to be very, very difficult just to push the stock even under 8. I think the stock's tremendously undervalued. Again, if you look at like Morningstar, their valuation is like 15. The DCF models, they're all at least 10. I mean, and guys who specialize in modeling growth stocks, they're usually like 12, 14. So, it is what it is. But I wanted to comment on the here's my tile, by the way, guys. SoFi stock at a critical crossroads, worlds colliding, Costanza style, shorts deeper, wrong in ER, smart money going long daily, baggy shorts, trapped turds. And guys, it's fitting on the big game Sunday. I don't want to get bleeped by the censors, but on big game Sunday, Don't forget, just a couple of more years till the Super Bowl is back at beautiful SoFi Stadium. So we have that to look forward to. Again, Max Payne, it's not pushing back to seven, guys. It's just not going to happen. Um, so I want to talk about the Gary Gordon piece that Tanner did. Great interview. Great get. I thought he did a really good interview. It was really fair in terms of what they were talking about. But you guys notice like UBS, the $8, they got a big short on the stock. Like a lot of these guys, these analysts, they're bosses who write their paychecks can short, go short, long, do whatever they want. So guys, don't think any of this is like locked up or on the up and up or whatever. I'm not saying that influences what he said, but it is what it is. I am running for president, Alberto Alberti. I combined your names there, Alberti. But I just can't get any traction. I think they are against me because I'm a chunky monkey. And I believe it was Taft. We haven't had that many chunky presidents. But it's been a while, guys. I mean, Clinton was a little bit chunky, but then he kind of got skinny fat. He became vegan. Um, God, who else have we had? I mean, Trump is, he's like not big. He's not like a big guy. He's a little big. He eats a lot of McDonald's, but whatever. Um, yeah, I don't think we're ready for another 300 bill president anytime soon. They have to make too many adjustments. They have to bring on extra White House chefs. It's an entire ordeal. So I just don't think they're ready for it. Gary Gordon and Tim Rio, good point. Gary Gordon said the same thing. He's like, he's a really honest guy and a really smart guy. I was like, and I said that right during my idiotic critique of his article. I was like, this guy's better than this article. This guy's a lot smarter than this article. I read his, CV. He's a retired analyst. He's analyzed this stuff for decades. He was a college professor. Now he's teaching mathematics inside like a prison system program. Seems like a really good, knowledgeable guy. But he even said, he's like, I did not do all the research. It's like this was a quarter of an article. I didn't actually do any financial projections. And by the way, on top of that, I don't know anything about Galileo. I don't understand it. When I read their explanation, it sounded like gibberish to me. Um, and he did the old song and dance that they all do. He's like, JP Morgan and Capital One, they spent billions of dollars on technology. But they're transitioning off dinosaur systems that they can't get away from. SoFi is native digital. Galileo and Technisys are tech companies. They're not a behemoth bank spending money on a tech department, and they don't have offerings to go out and sell those services, as far as I know, on the level of like a Galileo, separate companies that are out there selling software as a service. They're building their own systems. But maybe at a certain point, they'll decide it's far more cost effective that instead of spending those billions of dollars, that they can outsource some or all of that to Galileo or a company like Galileo. And it seems like companies have been doing that the last 6 months. There's all kinds. Why are all these RFPs out? Ask yourself that, Gary Gordon. Ask him that, Tanner. I mean, I thought Tanner did an exceptionally good interview. I was, he had a really good back and forth exchange of ideas, push back, push forward, but I thought it was just very instructive. And you see these old school guys, they have a ton of knowledge. And he was kind of a little bit cocky. He's like, listen, son, you haven't seen bear markets. He's like, and SoFi haven't seen bear markets. He's kind of equating us like growth stock guys, like his point he kept coming back to is they haven't been tested. They haven't been tested. It's basically been full employment, no recessions, COVID checks rolling out. He's like, let's see what happens. Maybe they'll make 80 cents in 2026. Maybe they'll lose $1.50 in 2027 if the economy falls apart. It's like he's like, 3 years is not a track record. Like, call me after a recession in 10 years. I'm like, but we can't do that. We can only go with the track record that we have. And he's like, I don't trust management. I don't trust management projections. You're a fool to just listen to management. And Tanner appropriately saying, I mean, I'm not just listening to them. I'm looking at the track record they have. I'm looking at their projections. They're extremely conservative. If you look at their projections for unemployment, they were projecting less rate cuts later than other people. They were projecting worse unemployment. Nodo is extremely, extremely conservative. And he's talking about, hey, Nodo has a 3-year record as a CEO. It's pretty decent. He asked him, what do you think about this ER? He said, it's okay. I'm kind of neutral on it, but it's what they projected, what they're supposed to do. They did what they were supposed to do, but they did it under very favorable conditions. He's talking about how it's so easy to grow because all you have to do is either lower your standards or pay more money, and you can grow financial services. I say I've seen a million companies do it. They grow, grow, grow. You shouldn't be looking at growth in terms of membership growth, in terms of revenue growth as a positive. You have to look at what you're actually taking to the bottom line, what those metrics look like, and what those trends look like, more importantly. And it was just a great interview. I actually, I think I watched it like a time and a half because I'm one of these people, guys. I got the gray hairs. Like I said last video, I do have a lot of battle scars. I have a lot of good and bad, and I learn from, the ones I make money on as much as I learn from the ones I lose money on. And the good ones I don't even worry about because I just keep holding and holding and holding. And if I need money instead of, selling those positions, if I want to hold them and paying capital gains, you can just borrow against them. So, let your shares work for you guys. It's not only selling options against them, but you can also borrow money against your shares, and you don't have to, cash out your positions and pay a bunch of capital gains tax. So speak to your accountant. I'm not an accountant. I'm not a financial advisor. I am just I'm just a fan. I'm just a fan. Anyway, I forget what else I wanted to talk to. He was talking about how EBITDA is not worth anything, et cetera, et cetera. But if you actually listen to the interview, his take was not strong sell. His take on SoFi was not at all strong sell. His take was they're doing pretty good so far, but I've seen this a million times before, and I wouldn't be surprised at all in 10 years if they're bankrupt. He's like, would you short it? He's like, I wouldn't short it, but I definitely wouldn't buy it. And he's like, if I'm wrong, if I've missed something, if they continue to meet their projections through, the next 3, 4, 5 years, I'll have been wrong, and the bulls will be the big winners. So, fair enough. That's not really an unfair position. But when I talk about worlds colliding, guys, I'm essentially talking about the conflict between smart money because we don't matter. We're dumb money. We can buy up the shares, but they can manipulate us into buying and selling the shares. They can borrow our shares. That's why they fear whales. That's why they fear smart money because just like Uncle Bruce was saying I was watching his video, they can't push it down anymore. It doesn't work because some of these whales, some of these huge smart monies, some of these, Vanguards, Blackrocks, etc., even ARCs, they come even one day if they come in and scoop up, 500,000 shares, it makes a huge difference because they play all their reindeer games after hours. You see this constantly. They borrow a ton of shares during the game, return them to each other, short longs covering. It's just the math doesn't always add up. But this is something interesting, guys. This is something you pretty rarely see is this divergence on Ortex. I don't know if I can show this full screen. Yeah. So if you look at this, guys, it's kind of a little bit hard to see, but this green line here, the bright green line, is the actual exchange reported short interest. So that comes out every 2 weeks. And then the red line kind of moving very near it for the most part is the Ortex estimated interest, which they compile and estimate almost daily or sometimes sort of in real time. Well, you see, they sort of track each other very closely. When there's a huge change here, it takes the estimate a while to catch up. But they usually don't diverge that much. And you see this huge divergence here from the 15th. So the 15th, the exchange is reporting 13.25%. And then the 30th, it jumps up, incredibly up here to almost 17%. And Ortex basically hasn't caught up with it. So that's very unusual, very, very unusual short activity to raise, 4%, 4.5% of the short interest versus the free float in only 2 weeks. It's a huge bet against the ER, and they were 100% wrong. I mean, the EBITDA growth alone is reason enough to buy this company. It's going to go to the bottom line. Anybody who knows math, anybody who knows accounting, sees how they're growing, sees how they're scaling, knows that EBITDA is going to come down to the bottom line. The earnings record, yes, 1 quarter, 2 cents is not that much, but you're a fool if you think that's their earnings record. You're a fool. You're lazy. You're not actually doing numbers. You're not actually even looking at the numbers. This EBITDA trajectory is unmistakable, the margins, and then management is telling you about tech. They're telling you about the RFPs. They're telling you about the new clients they brought on board in the last 6 months. They're telling you these clients are more profitable. These analysts that are just like, oh, tech's not going to grow. We don't believe it. And one thing I heard Gary Gordon and Tanner talking about, which was where he agreed. He's like, they're cutting back on the personal loans. I think that's actually very wise. So, and then the interest rate risk is completely overblown. SoFi hedges all their risks continuously. These guys are fucking financial geniuses. They're not everyone else's management. If you look at companies like Affirm and Upstart and Palantir and Robinhood, they're all over the place. They crash their earnings. It's completely unpredictable. SoFi is exactly the opposite. SoFi is rock steady. Y'all about ready to rock steady. That's what it is, guys. Who's here? Who's here? What's up, Gigolo Beach Slayer? I know I'm kind of backlit. I don't have any lights. I was just, like I said, I was here at home just outside of Biloxi, Mississippi, in my bomb shelter, and I decided to open up the window and bring you guys a little bit more Un Poco Mas. Guys, it's Danny Deals. It's Un Poco Mas. Of course, my main man, J Money, not a lurker, is here with me holding down the chat. Want to say a huge hello and I love you to Princess J on this Super Sunday. Got Cutie holding me down right here in her bed, snoozing away like the all-star that she is. Cutie has been a Pro Bowl selection 12 years in a row. Cutie has been a Pro Bowl selection. She plays special teams. She does punt coverage. She'll wash towels. She'll eat any snacks that are left over. A lot of great intangibles with Cutes. A lot of great intangibles with Cutes. We're bringing her in, folks. We're bringing her in. There she is. There's Cutes. Let's bring in our head analyst. Hello. Hello, everyone. It's me. It's Cutie. I love un poco más. Un poco más. Cutie, when I took you on a walk earlier, how much did you poop? Un poco más, por favor. It's cute. It's cute. Poop, poop. Oh, laptop for you. Okay. Go have cheat. That's cute, guys. Of course, our head analyst supplanted Hurricane Lopez for that lead analyst role. Thank you, Princess J. Indeed, she's our on-site producer. Not a lurker, of course, is our head producer, our technical guru, our wrench-wielding cat mafioso. But Princess J is obviously the head on-site producer and just generally the big boss. And Cutes actually is above me in the chain of command as well because I walk her and I pick up her poop. So if you're taking an objective overview, really, who's in charge of who? You know, that's kind of the way life goes. Oftentimes, you think you're in charge because you're a people and you have opposable thumbs, and then when you really start thinking about things, realize some of these dogs have it pretty good. But guys, it's un poco mas. I don't know. Does anybody else have anything interesting to say? Yes, I did not have a lot of coffee. I generally have way too much coffee. Yeah, Gary Gordon, trust but verify. My article was partial story. I didn't look at that. It was just very odd because that got amplified and it was kind of like the KBW call. It got an unusual amount of amplification. And why did he write that article about SoFi? It was just kind of out of the blue. He's like, I've seen a lot of these things before, MCI, credit card processing, um, but why is SoFi unique? Why is it's when people talk about disruptors. Kathy Wood has got so many of those wrong in terms of when she came in. Teladoc, some of these others, like she got Tesla right, obviously, but um, SoFi is making money already on a clear trajectory. He's like, a lot of these companies, Upstart and Affirm are cabbage. These are garbage companies. They finance Peloton bikes for people who live in leaky trailer parks and don't have two fucking nickels to rub together. Oh, we can do buy now, pay later on our groceries at Walmart. Stop buying stuff. If you have to put your fucking groceries and your Amazon purchases on 6 payments, get your money right and just stop buying stuff. I'll have Chris LaPointe come over to your house and kick you in the nuts. You don't even need a SoFi product for that. He put on a steel toe boot, he'll go berserker and he'll just kick you in the nuts. Because that's what you need. Like, stop buying BNPL. These companies are bullshit. And I mean, I'll tell you, Robinhood, I was watching, we were watching the GameStop story yet again. And it's like, listen, the Robinhood guys, their founders, they're full of shit. Like, and I know SoFi uses this payment for order flow to give everybody free trading, but look, somebody's going to figure out a better way of doing that. SoFi's products are far more sustainable in terms of technology, in terms of lending. Yes, Robinhood has a lot of deposits. They make money. They make money selling your orders. They make money selling your data, but that's a fleeting business. I mean, somebody else can figure out how to do that more better. And SoFi doesn't even really seem to want that business. SoFi wants long-term sustainable relationships and profits. Not a lot of hamsters on crack trying to, trade a bunch of options, getting in over their head, losing all their money, moving into their grandma's basement. You guys have seen that movie where Dane Cook, one of the worst stand-up comics of all time, works in a supermarket with Dax Shepard and Employee of the Month. Jessica Simpson is there. He's like, "I'm sorry, Grandma. I lost all my money in a hedge fund." He's like, "Hey, you got a small willie." Like, it's a really weird movie. They keep going to the steak smith and it's a Honda Civic. I'm not really sure where I'm going with any of this. But the point is, it's a pretty bad movie. But if you can't sleep and there's absolutely nothing else on, it's not too bad. But he was supposed to, he's supposed to have had some hedge fund, some great idea, got all his grandmother, all his family, his investment, and then lost all their money. So it's just a real tearjerker. But in the end, he wins the love of Jessica Simpson by constructing an elaborate miniature golf course. I don't know. Then there's some kind of checkout competition, and this big guy named Semi. They said, "I can't tell if your name is Semi because you're the size of a semi truck or because you're semi retarded." Anyway, it was kind of a funny movie. There's a little person who's in charge, and he bullies his brother. I don't really know where I'm going with any of that. Yeah, Robinhood has a great app, Ben. You're right. Uncle Bruce suggests a management increase guidance. A short squeeze may happen to a degree. I mean, it's not going to be an extremely dramatic short squeeze, but yeah, that was a really good video, not a lurker. If you have a chance to listen to it, yeah, that was very good. Jessica Simpson days, Fireman Pete. You're absolutely right. How does SoFi grow more members without spending insanely? Guys, here's what Gary Gordon was right about. Stop trying to grow members. They're obviously not giving us a growth stock valuation. I know growing is important and we should grow the quality, but not just growth at all costs, not just throwing money at it. We're reaching enough scale where we can start to actually make money and grow. We can have both guns and butter. And that's exactly what we should do. But this short is getting very, very dangerous. It doesn't make sense after the ER. Here's another good article that came out, guys. I'm going to get out of this live stream. I know you guys have better things to do. At least I hope you do. Unaided brand awareness goes up every single year, every single month. Guys, if you saw the Stock Goats video, web traffic is through the roof, guys, in January. Web traffic is absolutely through the roof. It doesn't always correlate with earnings, membership ads, but it's a very, very good sign. And some of that very good shine we had from SoFi Stadium in Q4, that might translate into a lot of products coming in. As if you saw my recent video, I have 6 SoFi products. I use 4 of them almost on a daily basis. Just did life insurance, doing travel, going to start doing more travel with Princess J. She'll be happy to hear that, and she thinks I'm full of it because I usually am. But anyway, so we are looking for, people like, how can I, you know, if you're an investor, should you be a member? It's certainly not required. I'm not saying, just get products to pump the stock, but if you use the app every single day and you use a lot of products like I do, you'll understand why SoFi is a great and unique company. It's just totally different than Robinhood. SoFi's not going to put Robinhood out of business. It's not going to put Chase out of business. That's not its job. Its job is to grow and to make money for the shareholders. It's as simple as that, guys. I mean, JP Morgan's market cap's like 500 billion. SoFi's 8 billion. I mean, they could encompass like 60 of us. You need 60 SoFis to get one JP Morgan. So we can double and then you need 30 SoFis. We can 10x and we're still a tiny fraction of JP Morgan. So let's stop talking about slaying Goliath and let's look at the fundamentals, guys. Raw membership numbers do not put money in our pocket. Raw membership numbers do not allow us to pay the employees in cash rather than stock-based compensation and get to the point where we can actually return money to shareholders. Doesn't help us get the valuation we want, the hybrid valuation. So what's actually going to help share? It's not necessarily just top line growth. Bottom line growth is a lot more important. And that trend with EBITDA is there. It's there. Noto and our executive team are brilliantly balancing the growth and the profit, the financials, the fundamentals with what, they want to see to give us. It's not just a tech valuation, it's also a growth stock valuation. We should be getting a hybrid valuation, a better valuation. Not a bank, a rapidly growing financial services conglomerate plus a tech company. Now, the tech company is not rapidly growing right now, but the trend is very, very good. I mean, look at this. You have a pretty unmistakable trend. You have 3 quarters in a row. You added more accounts, 8 more accounts, 8 more accounts. You're coming off the bottom. It's looking very good. I mean, this guy, Stock Info, he is absolute mega bull. I mean, he is really coming in hot. Adjusted net revenue up 35%, 1.5 to 2.07. Look at the adjusted EBITDA. Just in 2020, we were negative 45 million. 2021, 30 million. 2022, 143 million. 2023, 432 million. I mean, come on. Come on. I'm cereal, guys. I'm super cereal. I killed Man Bear Pig. Why won't anyone listen to me? I'm cereal. Anyway, guys, I highly recommend you read this article. I'm not going to go through it because you can read it yourself. This is what I'm talking about. Profitability has been in the cards for years. This is not a one-off. SoFi's telling you it's not a one-off. Guys, I got to wrap this thing up. I got some stuff to prepare, but the cash to debt metric, all this stuff is telling you SoFi is getting stronger and stronger as a company. Their financial position's getting stronger. They have more cash than debt in these certain ways you measure. I know it's not absolute terms, but you have to read the article, guys. I read it myself, but I don't have time to reread it with you and digest it all. Risks and challenges. Of course, if there's a bad recession, it's going to go bad for SoFi. SoFi is currently expecting GAAP EPS 7 to 8 cents, which is enormous for a company as it establishes itself as a profitable entity. We believe the company continues to execute and reach its targets. It could become a multi-bagger stock for investors, especially with the stock price hovering around $8. We rate SoFi as a strong buy. Guys, I really just don't like Mahomes. I don't like the Chiefs. I hate the Niners, but I'm kind of rooting for the Niners. I don't know. I just like the underdog in this situation. I'm kind of annoyed with Mahomes, the sunglasses, the brother, the annoying flamboyant brother, the dad, the DUIs. It's enough, guys. It's enough. Like, go away. I've had enough. Anyway, guys, thank you so much. I really appreciate it. And let's see what happens, guys. I think this is going to be a really good week for SoFi. I think it could be the week we shake off Max Payne, and options sellers might lose a little bit here. It just depends, as always, what institutions do, but it's going to be a wild one. Thanks for watching Un Poco Moss. Would like to thank Not a Lurker. You got Kansas. Welcome and hello. Keep away from the coffee. We'll do our best. Guys, have a great rest of your Sunday. Enjoy the game, and we'll talk at you again real soon. Some out.